Welcome back to this edition of Daily Actives brought to you by Bootleg Macro. I'm Dustin. We are looking at Warner Brothers, WBD, and damn, how bad was today. I apologize for anybody who was long. When I look at the chart right now, we can obviously see down here we've got 9 months of data at the very bottom here. This goes from the very beginning of March all the way through now, which is the 8th of November. We can see that the price was yesterday at $11.61. One of the things that I want to call out is that the price used to have red lettering with the white background. That meant that it was 3 standard deviations above its 23-day moving average. You can see across the board here, the price had just gotten above the 5-day moving average back here on the 31st of October. It had been kind of waffling back and forth. We can see we got a little bit of the respite here from some of the down days recently where the price had gone again high into those low 11s, mid 11s, and kind of high 11s. The thing that's really disheartening, especially if you're a bull today, and I want to be honest, is with this volume, because you get such a large volume spike as you get that big sell-off and it's hitting a new low, you really have to believe that this is real, along with the fact if we look, we have a 1-day, 5-day, 15-day, 1 month, 3 month, and 6 month negative rolling return. Now, these signals here, when it comes to the trade signals, you want to ignore these for now because the short-term, intermediate term, and longer term are currently saying go long. That obviously is not true anymore. If we're looking at the trends as well as in the short-term, intermediate term, and longer term, it says that we're looking at bullish. We are definitely not looking at bullish. We are definitely not going long because things have changed. And if we look, we'll find signals, we'll find signs of what would clue this in. If we look at the rising bull here, this thing's been rising since the middle of October. Looks like, yes, today or yesterday, what we had today from yesterday, because the bullishness is going to be increased because yesterday was such an active day. It's going to drop significantly. We're going to go from 63% on the 10-day bullishness to 52%. It doesn't seem like a big drop. It is. When we think about what we're going to see in terms of the 2-day, if we look back at WBD, which I doubt that will come back because this is about to be a really sad story. And I apologize again for any of the bulls. I'm actually dapping to the bears. If you're short that from that level, respect to you. Let's look at where it all went wrong. Where it all went wrong was here on the trade range. The trade range, essentially, now to a certain extent, that the probabilistic range at least gives you the ranges of where it could go. Obviously, we can see here in the past few days, we were 3 standard deviations above our 23-day moving average. Let's not forget that. Top of the range, we were way out there. We snapped back to the very bottom of the range, essentially. We're at 940. Yesterday, we were at 1161. The bottom of the range is at 892. These things are mathematically driven, and you can see the way that the stocks actually move because it's just... Most of the time, this Brownian motion has no impact on anything, but some days math actually works and derivatives are very real. If we're looking at the volatility to the price, actually, let's look at the volatility first. Volatility is actually falling. I'll say that's quite concerning because the volatility is about to break out. We're not sure exactly how high, but all we know is it's about to break out and the correlation is going incredibly negative. If the volatility starts to break out and the correlation is still very negative like this, you're going to see a whoosh down in price. Again, and we were talking about the volume earlier. This was the largest day of volume in 9 months. Oh boys, I hope you're a bear. But tell me what you think in the comments below. Are you long? Are you short? Do you like it? Do you love it? Is this even a good review? And before you go, subscribe to the New High newsletter. We give you 25 stocks to your inbox every single Sunday. Stocks between $5 and $20 breaking out, stocks breaking out to 1-year highs, stocks breaking out to all-time highs. It was a great list to get your trading week started. I'll talk to you soon.